We're a
Kevin
Duke.
Newley.
We're a Duke
Go
family
ahead.
from North Carolina.
Yeah,
I don't know
probably.
if you're a Dookie or a North Carolina fan. I don't know.
They call them Dookies? That's
Yes,
interesting. Hmm. Do they spell that differently? I'm just kidding.
I don't know.
It's all good. All right, we're four after. I figured that's probably cool. If you guys are still jumping on here, haven't let us know where you're from. We're excited to know. Just drop it in the chat here. I figured some of you don't know who we are or why we're doing this. Obviously, this is the Private Money Pros call today, but the company behind it all, I'm the CEO of it, Chrissy over here. She could probably wave. She's the president and she's heavily involved with all this. We're Amped. You might have known us before as Mortgage Growth System. That's the name we went by for years and years and years. We've been doing this stuff for 10 years. And what do I mean by stuff? Actually, a little longer than 10 years. At the first of the year, we crossed our 10-year threshold, but we've been working in the real estate lending space basically since 2016. And we've been heavily focused on the private lending side or investment property lending side of things since about 2022, although we started getting into that side in 2020. A lot of you, if you're familiar with us, you may think of us as like a marketing company, a lead gen company, that kind of thing. Or the truth is, these days we're a lot more than that. So we still do that for sure. One of our newer initiatives is the Private Money Pros. That's a community mastermind. I'm going to share a QR code. And actually, let me just put in chat. I think I have it already. Yeah, cool. It's already in my clipboard. So I'm going to put in the chat. That's where if you guys have an interest, you could check that out and join on that. Join there. We'll talk about that more later, closer to the end of the call. We also have a basically what you'd call a SaaS or a CRM and LOS specifically for private lending. And another cool tool that we're offering as a special bonus, it's called LenderBase. That's a deal matching tool, helps match your deals to over 100 different lenders. And we'll kind of get into that again a little bit later. So I just wanted to kind of let you know who we are. And also, I should probably mention we've worked with hundreds of different brokers and lenders over the years. So we have a lot of experience. We also have a sister lending company, which is technically a brokerage called Amped Lending. So we're very heavily in the space. We have a lot of connections, know a lot of things. We know a lot of the challenges and stuff people face. That is actually largely why we started Private Money Pros, to start giving people more resources. In the past, like I said, we did a lot of lead gen and such. Still do that. That's not a solution for everyone. And in fact, today we're going to actually talk more about how to close more deals without getting more leads. So I think there's a lot of things that, a lot of gaps and issues that people have in their business. Sometimes it's tech, sometimes it's their team, sometimes it's leads, it's lots of other things, and that's kind of what we want to tackle throughout the entirety of the Private Money Pros thing. Today, we're going to largely be speaking about rehab loans, why a lot of people don't capture those deals or have struggles closing them, or maybe just don't do them, and kind of help maybe simplify this for you a little bit. That's why we have Joel here today. Might be obvious. Name of his website, BRRR.com. That's four R's. If you didn't catch it, you might want to check that out. We'll talk about what he does today, but he's going to really kind of lead the show, at least largely on the rehab stuff. While we're going through this stuff, if you have questions, of course, you can write them down, or even better, put them in the chat. At the very, very end of this, we'll open it up and try to address every question we possibly can. I would also ask, if you don't mind, keep your mics muted if you're not designated to speak. We didn't this is not like a webinar where we control your mics. At the end, certainly open them up and make sure we weigh with helpful information. And if you have questions, get them answered, because I do think Joel or some of the other people on our team might be able to do that. So without further ado, as long as I haven't forgotten anything, I'm going to share one last thing real quick. If I can find where I put that image. Yep. If for some reason you're on a phone, I don't know how might work, or if you just can't, use the link in the chat and you do want to check out the Private Money Pros, this QR code, right here. We'll get you over there. You could probably just take a picture with your phone, screenshot it, whatever. But the link obviously is the easiest if you're on a computer. But without further ado, I think I'm going to pull that off the screen here, get off the screen share, and make sure the camera's working. Sounds everybody can hear me okay, right? And Joel okay, right? I think Joel's already chimed in a little bit. Yep.
Yeah, I think we're good. I think we're okay.
Okay. Well, Joel, I want to kick this off with a very specific question, if you don't mind, which is, do you have any idea? What do you think is the reason why so many brokers avoid rehab loans, and are they potentially overcomplicating, what it takes to get them done?
Well, I definitely think they're overcomplicating things. I believe a lot, I believe a lot of people stay away from them because they've never personally done one. And thus they don't feel, I don't have the experience to be able to share with Brandon. He's going to know that I don't know. A lot of those things that are going on, but they're going on in your own head. They're not going on the person who's reached out to you. That person is looking for you to guide them through the path. And if you can just slow yourself down to get to neutral and from there just work your way through the natural progression of questions you always ask, I think you can get started in the right direction and start to build a foundation of confidence with Brandon, right? I think one of the mistakes people make is they don't prepare for a call. They just jump on and wing it. I don't think really successful people wing it. Does that mean they never have that situation? Of course, we're human. We all have that once in a while. But they're spending the majority of their time preparing so that they have an organized professional sequence and they can walk John or Brian or Eddie or Kevin through a succession of questions on a consistent basis. Look, if you don't have that much experience at doing it physically in the field and you know the natural progression as a reflex, write it down for yourself. If you don't have someone to talk to, go to your friends at ChatGPT and Gronk, right? And work through it backwards that way. Or go to YouTube and see the progression of how somebody builds a house. So that when I am talking to Brandon, who's got 3 for experience in ground up and has flipped 10 houses in the last 3 years, I sound like I have some idea of what I'm doing instead of just approaching it cold and hoping Brandon likes me. Well, hope isn't a strategy. It's how you end up with my haircut, right? It just doesn't work long term. So getting yourself more prepared. I mean, think about the intro that Brandon just did to this today. About 7, 8 minutes. He didn't wing it. He prepared. He had some notes of what he wanted to say. He might have looked down once or twice to make sure he's touching base on all his boxes, right? Do the same thing in your calls. As a lender from our side, we're going to ask you questions as well. And I can't believe how many times a broker calls me and doesn't even have the address of the property. Hey, can you guys do this? How fast can you close? Right? Those are the questions. Well, that's really frustrating to us versus, the guy owes this much, he borrowed it then, the interest rate so and so, the payments are this, he's always been current. This is what we want to do. Right? These are two different approaches. And until you gain some consistency in your methodology, it's always going to feel scary. It's going to be really arbitrary and it's going to come across that way. So if you can slow yourself down, get yourself prepared and organized, and then present in that manner, you're going to be infinitely more successful on a regular basis. And I think that's one of the mistakes people make.
Very, very cool. Very cool. I have another question here. I mean, at a high level, how do you think brokers should be thinking about rehab loans? And, I guess what I should say too is like what actually matters in the deal versus the parts that maybe people overthink, or that they put too much weight on.
How many people have ever taped themselves on a call and listened to it back? Has everybody done that?
Put that in chat. I'm curious to know because it's
It's
a
one
big
of those
deal.
things. Sometimes you get a phone call and the person gives you all this story and your head just wants to explode. You
Mhm.
still have no idea what the deal is. Like, you want to get the deal points down quickly and succinctly and be able to relay them to us so that we can give you Brandon, we can do that type of deal. If you can fill in the experience and the credit checks out, here's what the structure would look like. You want to get there fast so you can spend your time wisely, right? You're going to go to six of us and make sure you got the best deal for your client. And I think that's important. So getting the story down and eliminating the story and sticking to the relevant facts of the deal is going to build your relationship from both sides. It's going to build it with the borrower. You're going to be really organized and professional, and it's going to build it with to the lending source who's going to provide you access to the capital. And obviously, you want to grow that base and have a couple of key players that you go to on a regular basis. The whole world is not Kiabi, right? It's not the answer to everything. It's the answer to a lot, but not everything. And thus, people prove it to you every day in outreach looking to meet Kevin and Fred and Brian and John and Jimmy so that they can give them the best alternatives that are out there in the market. I'm often surprised myself. Some of our clients have been with us for almost 20 years. It's like, why would I call Joel up when I've been doing this and have been through so many loans myself already? But they're running their businesses and they're not running yours. They don't know where to source the money at the best structures and pricing. And they're depending on you to be their eyes and ears to do that. It also gives them an opportunity to negotiate through you. Most people, not all, but most, fear that or don't like that scenario where I'm sitting with Brandon across the desk one on one, and we're just going back and forth to see who can get the lowest, right? We understand you want to get the best for your client. We get that. So be fair with us, make it easier for us to give you the best. Be prepared, be organized, have it written out in a two-paragraph email where the paragraph isn't one big run-on sentence. Remember, everyone is looking at these things in a car, on a palm top, on a phone. Make it easy. Have individual one thought sentences, and don't make it into 1,600 words in one paragraph. No one can read that. And most guys like me will just delete it, to be honest. That's the truth. I know you don't want to hear it, but it's real. Make it simple for us to understand what you're getting to. Highlight one or two things that we should be really focused on, and let's move it forward with you. Let's make it easy for you. Getting the key pieces of information from your client fast is only going to improve your ability to execute at a high level for them. Keeping it simple too. Keep it simple. Don't get stuck in 8 million acronyms. Take yourself to a place where you're unfamiliar and uncomfortable. Keep yourself in your own sweet spot. You understand this well. And each rehab loan in today's market, not 3 years ago, but today, gives you the opportunity, most likely, for a DSCR loan. And if you can get that person from one loan into two, they always have a friend who looks like them because investors hang out with investors, right? So if Eddie can walk Joel through a fix and flip, unfortunately, I couldn't sell it. I gave up after 40 days and said, screw it, Eddie. Let's just find the best debt service coverage ratio loan for me in the country, and I'll do it with you. I got another friend, he just finished a house. Like those kind of conversations naturally start to occur. But you have also now earned the right to ask for a referral. You just did a very good job. You took them through professionally. You were organized. You communicated well. You kept the paperwork down to a minimum that they actually had to fill out, right? Because as you guys all, men and women all know, you send out these beautiful emails with great, great stuff in it. And you're so psyched about how well you did it, and you never get it back, right? Most people, had you sent that pre-filled out and DocuSign ready for them, your percentage of turnaround is so much higher and greater to get to the closing table. It's unbelievable. So either get to the point where you have enough monthly business where you can have an assistant, and in today's virtual world, that's pretty easy to do, such that you're not bogged down filling out some of these forms all day, but get in the habit of sending people predominantly filled out and completed forms so you can get these things turned around quickly and keep your business moving. I mean, selfishly for you, that's what you want to do. And it aligns perfectly with the client because I have yet to meet one client in America that likes filling out paperwork. They just want to know when can we close, right? Can you do it
Exactly.
cheaper and when can we close? So let's help each other in that sense. A lot of the things that we're working towards and doing in our company now involve artificial intelligence to cut down on the paperwork flow for people. And I think as you start to realize and understand that and incorporate that into your business on a regular basis, it will help you as well.
Yeah. Perfect. Yeah, actually, Joel touched on two things there. AI, that's a big thing. So if you're sending out messy emails to your lenders trying to get a deal, you can certainly use AI to help you with that. Actually, by the way, next week's call, next Wednesday, same time, same place, same link to Zoom link. We're actually going to be diving into AI. And in fact, if you are going to end up participating in the Private Money Pros group here, we'll definitely be on that topic a bunch of times. We even have some modules and stuff in there. We'll get more to that in a second. I did want to bring up one thing I mentioned in chat, but I didn't say it on the audio here. If you have not, especially if you have not done a rehab loan, if you put it in chat, I'd love to also know maybe why. Maybe it's just you haven't had an opportunity, you're scared to, whatever it is. That may help us be able to answer and help you more during this call. But I do, while we're getting into that, this might pertain a little bit to people who haven't done it or they haven't done very many or they still don't feel comfortable. So Joel, when you're looking at a deal, rehab deal, what tells you it's solid? What tells you, hey, this might be a red flag, this might be a deal breaker. So kind of give us the high level on that stuff if you don't mind.
Yes. A lot of people reach out, they have a great deal, they love the deal. And the broker that's bringing us the deal has never looked at the area, they haven't Googled the property, and they don't realize that the after repair value is 300% of the average price of the neighborhood. They've seen the rendering, it's going to look amazing, it's going to be awesome, but the problem is it makes no sense. We had to turn down a couple of deals in Georgia recently just for that reason, where probably going to end up one day being amazing, but today it was too early. So making sure you go over the deal before you present it to somebody, I think is important. Getting a good handle. Do these numbers, these ratios make sense? Do they make sense for the area as well? Right? If you're looking at a deal in the purchase price plus the renovation relative to the ARV is showing you profit margins of 15 to 20% possibly or higher, that's really good in today's market. Once you show us the deal and it's down to 10% before you factor all the costs, for us, that's going to put us into they better be really experienced and God, they got to be good. And that's got to be a simple, grandma style house in that neighborhood to get in and out that fast to make that all work, or else that's not going to work, that deal. So we're looking at the ratios, not just purchase price plus renovation relative to after repair. We're also quickly looking at that relative to the neighborhood. We want to make sure we're not going to invest a lot of time trying to figure out if your deal can or can't work, if it actually can't work. We want to make them all work that can, but we want to quickly eliminate the ones that unfortunately are a hope and a dream. It's frustrating, believe me, because look, it's $1 million loan. We both of us, you, me, we both want to do it. That's not the issue. It's just, if the whole neighborhood's selling for 350, are we really going to be able to sell $1 million house? The leverage lines that I use won't let me do it. So I need to be cognizant of that. And I think from the broker standpoint, as you pay a little more attention to that, it's going to help you a lot as well, save you a lot of time.
Cool. Are there any other common mistakes you see? I know you've kind of brought up a lot. And then upon that, maybe also tell us about like where you see deals tend to fall apart as well, or what's the sticking points?
I think one of the things that you want to begin to work on is learning about the renovation budgets. Things should make sense in the renovation budget. I know it's an imperfect world, and in different parts of the country, things cost a little different. But for us, you're helping the client manage their way through this project, understanding how to front load their renovation budget instead of having a brand new person who just went to a boot camp come back from the camp and Coach Brandon told them, you're going to do it this way. Well, that's great on a blackboard or an Excel spreadsheet, but in the real world, the contractor wants to get paid every Friday. And if your demo on the project, let's say you had a $60,000 budget and your demo is $2,000, because that's really what it cost you, why not make it say 5,800? Now your first draw, you have $4,800 extra in your pocket. And on Friday, when Brandon's crew wants to get paid, you have the money available, right? You don't have to go scramble for the money. What about making your first mortgage payment? Now you have money towards that payment. So you want to help your clients set up the budgets so they're advantageous for them and help them manage the process well. I mean, we have people, as you can imagine, and a lot of you have already experienced, they'll call you up for a $5,000 draw on a $100,000 budget. You're like, maybe I shouldn't have lent the money to that person because they're way too thin. Other people will call us every 20 or $25,000. That seems a lot more normalized to me. So you want to help them and help yourself because you're going to get the calls. That son of a bitch over at Burry wouldn't give, blah, 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 blah. I put in a draw for X. They cut it back to Y. I'm screwed. You screwed me, right? You, like it's your fault now, Kevin, because you gave him to me. You screwed him now, right? Because you didn't really explain how that was going to work. And you assumed it would work normal where the guy or woman would take a 20 or $25,000 draw. And if you got cut short on the draw, it's 22, right? It's not 5,000 and you get nothing because you really finished that work last time, sir. So understanding that process, I think, is really important to help your client and yourself to cut down on headaches in your own office. Deals themselves a lot of times really die just because of that after repair value is so fluffed up. Sadly, we don't get there. And in some cases, you could you could fight the appraisals and CDAs all you want. You could throw out the CDA and do it over again. But if you don't have a friend at Clear Capital that's really willing to change things for you, that's like calling up deaf ears, right? They're going to just have another person look at it and give you this basically the same report. It's really frustrating for all of us because once in a while you really, really believe the customer's right, and it's not just hoping, but we don't have a way around it. So again, spending a little, maybe 20 extra minutes up front or 15 extra minutes up front, doing a little bit of research on the market area where you're proposing the deal, I think is going to save you and the client a lot of time and you a lot of frustration of quote wasting your time. So I think as people, and I'm guilty as hell of it, time management is probably the single most important thing in what we're doing here. Being able to prospect and deal flow and get paperwork into people and follow up on in-process deals and get those in-process deals to the closing table. By the time you look down, once you start doing 10 loans a month, it gets busy and it's hard to keep track of it all. And you say yes to a lot of things you shouldn't say yes to. I could tell you I'm guilty for a lot of years of my career of being horrible at that. I think I could make it work. It's not a good use of time. And it's not fair to the person on the other side of the phone. So I've worked really hard to get better at it. I'm a recovering addict, but it's still a work in process so that we can still spend some time prospecting during the day, or else you have no future pipe, right? So you got to constantly be managing that process, that overall for yourself, so that you can keep yourself growing all the time with good deals, not just things that fill up the pipeline that look good in the pipeline, but things that are really going to close. You've done your work on the property makes sense, the budgets are rational, the way the budgets are structured are going to make sense for the person. I mean, I can give you a live example from today. Guy's buying a house for 900 grand. It's here in New Jersey. We worked out a 10% budget. It's the minimum budget we can accept, such to be able to give him 90% leverage. He'll probably never draw on the budget off the record, maybe 25, 30,000, not 90. But we need that, or else we have to cut him back onto the table. He doesn't want that. He wants max leverage to the table. The after repair value was 1,200,000. There was enough room there to make that all work and maintain over a 10% margin. So we were able to move forward for him. And again, understanding how to work with the client and talking with them like a normal person, just comfortable, confident. That's what they're buying into. Helping them make a couple tweets. Oh, Eddie, I'm never going to spend that. Why are we doing that? We just discussed needing to have a minimum of a 10% budget so that we can get you to the 90% leverage. And you told me that that was the most important thing to you. So I'm trying to work with you based on the pictures that I see online, what we can add to this budget that will make sense. So when my underwriter looks at it, so okay, that's reasonable, and move it forward in the pile for you. And you don't want the underwriting departments getting really into these files. I know that might not sound so great, but the reality is you want to give them something that they can check the boxes on that makes reasonable sense and enable them to move forward, thus enabling you to move forward. Right. So understanding how that process works and being able to help your clients with it, really invaluable to you.
Cool. Thanks, Joel. And I did see Jimmy, since I had a little bit of a question since he worked with us internally. I wanted to see if you had anything to add to that or to help Joel expand on those answers. Or you put your hand back down, Jimmy, so maybe your question disappeared.
No, my question was more to what do you think should be like your top ARV all in that a property, like a solid property, looks like?
When are you asking me if you take the purchase price and the renovation,
Rehab, yeah, purchase rehab,
how much room should you
financing.
have towards the
Yeah,
ARV?
yeah. After you like once you add all that up, what should be your cap? Like you shouldn't be going over 80% ARV once all in or
Look, the rule of thumb has changed dramatically in my 30 years, right? There was a time when if it was 65 or higher, you thought that was too much. Then it became 70, 75. Now, Jimmy, you're right. I think somewhere in the 80 to 85 range is what we're all looking at. And
okay.
deals don't pencil out where the purchase price and renovation budget are over 80 to 85% of the after repair value. Granted that the after repair value is real, it just gets too tight by the time you factor carry, a little oops, the nasty 5% selling fee that the realtor is going to sell you to charge you to flip the house. Right? You got to really factor all those things and see, is the person still going to make money? Some people say to me, well, what difference does it make? They're willing to put down more to make the deal happen. At the end, I need to feel like they can really make money, or else I could be stuck with it. And I don't really want to be stuck with it. I would have bought it myself, right? And taken that risk. That's not what I'm really vying for as a lender. I want to make sure that deals work and make sense. I don't want to see somebody get stuck, honestly. We're not in this to take the property. And definitely not in it to take a property with 85, 90% of the juice already eaten. That's for sure. Right. So selfishly, I want to help you make sure the deals work so that you can be successful. Your client's going to be successful. And together, we're beginning to build a long-term trusting relationship with the parties because that's really the lifeblood, right? You could spend $1 billion on the internet, but if you don't eventually have 100 people you can go to bed December 31st with each year, and know that you're going to do 200 loans from next year, you haven't built the right business in the last 3 years, right? That's really what you're looking for. I mean, that's my goal every year is to make sure I've increased that 10% because 10% are going to fall off. They're going to retire, move to a different part of the country and find other people that are just more local to them they're more comfortable with. They are going to find private lenders that give them 100% of everything at really cheap prices. So I got to keep filling that funnel with newer or rookies. That's true. But my core guys, I want to make sure I'm working with them all the time so I can do 3, 4 loans a year with them. That's really my business. That's what I think all of us on here today are looking to continually build more of for ourselves, right? That's the purpose of joining into these masterminds, to hear people talk and ask questions and think about ways that you can approach your own deck of clients and earn more business out of them. because that's the lowest cost client for you, right? I think one of the biggest mistakes, I know we've made it Burr, and I think lots of companies like us, we spend a lot of money on new client acquisition and not enough time on watering the flower of our own client who already knows Brandon's email address. Brandon doesn't have to come up with the single sexiest subject line to get Joel to open his inbox email because we already have some kind of relationship. So why not talk to each other once every 90 days? See what's going on. You can always call up with a dumb question. Any problems with servicing I could help you with? If they screw up the insurance escrow on you. I mean, those are normal things that happen. So, hey, at least Eddie's got me on the list and knows he should check on me. That's better than the other four guys I did business with this past year. You know what? Fuck it. Excuse me. I'm going to give Eddie a call next time, right? I mean, that's how you start to build that. Or you keep track through your CRM, or yes, I was guilty for a decade with the yellow pad and notepads. When does your insurance expire? When is your loan going to reset? When do the prepayment penalties drop down to 3% so we can start talking? So that you can follow up with these people naturally, not just send them, hey, happy birthday, right? Like, come on. Give them something to say, hey, I'm paying attention to your file, not just happy birthday from the CRM.
Yeah.
Mix in a little bit of human, and you're going to generate probably 20% more business just from your own clients who already like you. They went to the closing table and paid you. They like you. Give them more of a reason to expand with you by talking with them. Don't forget about them. They're gold to you. And I don't want to say free gold, but low cost gold versus the next new person that's difficult. And you got to spend a lot of time, money, and effort to nurture to hopefully get the chance to provide a term sheet that's still competing against six other people, right? Versus having Brandon be pretty wedded to you. Brandon, that pricing feels pretty good, but could you chop 250 bucks off somehow to make me feel good? And that's cheaper for you to do that than to go find new people all the time, even though you didn't get exactly what you wanted. But what you did get was a low cost closing in terms of effort, in terms of time, and the amount of touches you had to put together. So your own client base becomes a great watering tool for your future and growth.
Cool. And actually, this has been touched on a few times already on this call. I do kind of want to get into this a little bit more since we're kind of already going down that path, is kind of talking about what I would call like income expansion, how doing rehab loans, plays into that. Obviously, the repeat borrower aspect of it as well. While I'm asking that, I'm curious to know in chat for anybody that's been here. I mean, have you ever, does anybody have a client, they did a rehab loan, maybe that's the first loan you did for them, and then they came back for maybe it was another rehab loan, a DSCR, something else. I know from our side, when we work with clients on the marketing side, a lot of people we work with don't want to do rehab loans. They always have some excuse, but one of the ones that comes up a lot is, oh, I make less money off those, so I don't want to do rehab loans. Obviously, I'm not personally on the lending side. We have a lot of other people here like Joel that are, but it's pretty obvious to me that doesn't seem like that makes a lot of sense, especially from a long-term perspective about what most people want to do with your business. Joel just touched on it, grow it with clients that know you, basically are married to you and want to keep coming back. But I want to hear from, people here in the group too. Have you done a rehab loan that turned into more deals in the future? And then Joel, maybe you can expand on that a little bit. Before you answer, just real quick, if I know we're about 40 minutes into the call. If anybody does end up needing to drop off, I'm going to pop a link to a YouTube channel where we've been putting up these calls, and we'll continue to put up other ones in the future. You can check them out here for any reason you had to jump. But Joel, tell us the flaw in that thinking, if there is flaw. Maybe I'm just making an assumption here.
The flaw in which thinking? I'm sorry.
That you don't that it's not worth my time to do a rehab loan because I can make twice as much off a DSCR or something in the
I actually think that's the exact opposite of way to think, to be honest. I think the rehab loan, I mean, you're closing them in a week. Could you make twice as much in a DSCR loan? Maybe. But if you're charging 1.5 points on something that's closing every 10 days, I mean, that's 3 points a month. It's hard to beat that on a DSCR loan. Uh, so I view it as an opportunity, and I love doing those. New construction, there's no problems in the way already. No one's made any mistakes yet. Rehab loans, a little more sophisticated on the budgets. But again, if I can close it every 10 days, I'm thrilled. And then in today's market, depending on what market you're in, that generally going to lead probably almost 50% of the time now to a DSCR loan. And since they're moving through that job relatively quick, you probably only have to touch them 2 times to stay on top of it, such to be prepared to work them through to that debt service loan next. In a 100-day cycle, you have 2 loans now instead of, just passing on the fix and flip style loan. I wouldn't do that personally. I think you're making a mistake. Um, I could tell you that DSCR is becoming more and more automated, and I wouldn't want to not get good because of avoidance for no other reason than avoidance on the on the renovation style loans and construction loans. There are some companies out there that only do construction loans in their office. There are a lot that fix and flip solely. There are plenty of DSCR only shops, but I don't think it's three completely different lanes. I think they complement each other, and more so now than probably from 16 to 22, 2016 to 2022. But now, as a lot of markets have flattened out and gone sideways or even down a little, I think more than ever, there's that natural opportunity for you to take one loan and grow it into two, and then ask for a friend. So one becomes four. I think you got to start thinking that way and spending some time just going backwards. Like, how much money do I want to make a month? Realistically, what do I really want to make? What's the average size loan in the debt service world in America? What's the average size loan fix and flip in America? How does that relate to what I'm trying to make? How many is that? And then going backwards of how many calls I have to make to generate that. I think, the math doesn't lie, and becoming more business-like in your own business is going to help you succeed instead of just approaching it as these one-off ventures all the time. I think that's a mistake a lot of people make. I mean, I asked one of the young guys in my office, like, you were here for 6 hours. Wow, you really put in a hard day, right? 6 hours, really crushing it. And how many calls did you make? Well, no. Actually, how many calls did you really make? He'd made 10 in one 6-hour stretch. Like, that's abysmal. That is horrible, right? I mean, you should be making 10 an hour or plan your day strategically. So 1 hour is the call time and you get 12, 15 in, and then you spend time putting them in the CRM, not while you're doing it, right? We've talked about that a little bit, but you want to use your time productively. Taking people through the whole cycle, I believe is really important for your overall profitability of your business. And I see in the chat, always get at least 2 points. Yes. Do your best to try to get to 2 points all the time. Yes.
Awesome. Thanks, Joel. Since it seems like I didn't see answers from everyone, whether they've done rehab loans or they're fairly experienced or not. Either way, this, like I said, will be on our YouTube channel. So some people might be watching this out there that have never done one. What's the easiest way to start? Not, of course, it's talk to you at burr.com. Joel Kraut at burr.com. I'll put that in chat there. But besides that, what are some of the tips that you can tell us for somebody to get their feet wet?
I mean, look, I think you always are out there talking to lenders, seeing what they require, what they're looking for, so you become more and more familiar with it. I think that's really important, right? You want to get comfortable with it because people are going to buy into confidence, competence, and kindness. And as you're more comfortable with the requirements, you can relay them better. That comes across in how you talk with people. And that's going to also bring you more opportunity. Also, knowing what is needed enables you to go into a lot of these chats and start delivering advice and recommendations instead of just DM me. Gives you the chance to begin the opportunity, not the chance, the opportunity to begin to build authority in the space. You might not get something direct from that call immediately, but you and I both know whether they responded to your text message or not, everyone saw it, right? Because in America, I could speak for almost everybody I know, they look at the damn phone. So they see it and they might not respond now, but they see that you're offering them information for free. People like that. They might not respond now, but you're planting the seeds for tomorrow and doing that socially online so that multiple people see you, other lenders see you, a lot of newer and rookie style investors see you. And the longer they see you there and consistency, that's what they're looking for. Don't spend any time responding back to people and fighting with them. Like who's right, who's wrong, not relevant. Let the chat determine that. Don't you do that. You don't need to. Okay. You're giving them honest, real world information, and that's your responsibility. If somebody has a twist on it, God bless them. But you talked to 10 lenders, they all told you the same thing. You Googled it to verify, and then you felt comfortable putting it and posting it publicly in the Kansas City real estate meetup, in the Chicago meetup, in the Raleigh Durham meetup, right? You want to start to get your name there 3 times a week and build consistency for 6 months. And I hate to use the word guarantee, but in this case, I'm willing to bet you a dinner that if you do that for 6 months in three, four, five, six different places, you will, in spite of yourself, start to generate 4 to 6 loans a month. Just from that. Don't use the DM thing. Don't send the picture of, I can do that. And here's our list of 73,000 programs that no one looks at. Give them real information that they can see and read and digest and move on. But just do it consistently as hell. Be that boring, annoying person who always seems to do that, and people respect it.
Thanks. Well, pretty soon here we're gonna get in the Q&A and open up mics. I want to do a couple things real quick. I want to make sure Joel has an opportunity to talk about, his experience, what they do at Burr.com, why you might want to reach out to them, especially as a lender. So Joel, let me shut up and then I'll talk a little bit after that, and then we'll go to Q&A.
Well, I appreciate the opportunity to be on with everybody. Thank you for having me. And, it's really cool to be part of the group, honestly. When I started out, I was truly by myself alone and kind of craved to have a situation where I didn't feel like an idiot on my own and didn't have any help from anybody I could feel like I could trust, right? I mean, building groups like this is fantastic. When we first started a couple weeks ago, one of the things that I said was, I don't view any of you as competition, not in a negative way, but I view the United States of America as such a big place to find business. We can all find a lot of business. So I would rather have the opportunity to interact with people and learn more from them than fight with them over one loan. So I feel like these types of environments that Brandon and Chrissy are helping to build are really, really good opportunities, great opportunities to help younger people into business, newer people starting out into business, people who have a couple years of experience, and even people like myself who've been around for God knows, forever, it feels like. But because we have an opportunity to keep learning from questions and how people interact with each other. For me, it's about relationship capital, finding people that we can dig in with and just work with for years on end. I've been fortunate enough to have some people working with me for 15, 20 years. We've done significant amount of loans together, as some guys as many as 50. And, having that repeat relationship where you become their trusted confidant and not their broker, that's really when you're going to step your career to the next level. That's really when you'll double. You're like, wow, man, this year I doubled my income. It didn't even feel like I did that much more work. But you had planted the seeds for the last 3 years in that client base, and that client base got stronger each year, and the quality of their deals was better each year, and that translated into your P&L. And you'll look down and, you'll thank yourself. I tell the younger people here all the time, if you really are willing to give up a little bit of time now for 12 months, 24 months, you can't believe where you can be in 36 months. It's unbelievable. Today we're working with somebody. He just finished a new construction project that we funded for him. It was his first ground up, and we did the unthinkable. We charged interest on all the money from day one, but he couldn't get another lender, so we were his entree into the business. But we went out to do the draws with him because in those scenarios we do the draws in person. I show up literally and take the pictures. And it helped. You could see the person's body language, their facial expressions as they were learning their way through their first new construction deal. And I've had the good fortune of building 185 houses. So once in a while, strategically, not when they were super down, you would inject something. Hey, do you ever consider this? I don't do that when someone's really feeling their worst they've ever felt because they kind of feel like, well, I'm telling them they're stupid. That's not the point here. The point is to actually help somebody in the process. So when there are opportunities to talk with their contractor in front of them or talk with them on the side to have them go approach the contractor to go over something, you're building tremendous trust with that person. And to point to today, we're refinancing that house. We're figuring out how much money to take out, cash out, so you can use that money to buy the next property, which is already being teed up to go to contract. And am I competing with other people? Yes. But is a guy taking you out to lunch on his check, getting this information from you, going over options with you, then to walk away from you? Probably not. He could have lunch with whomever he wants, right? Or she. So you want to build those types of relationships. I know through the internet, it's not as easy and depending on where you live. But for a lot of you, you're in great areas where there's plenty of density and there's plenty of people to go build those relationships with. I can't stress enough relationship capital. It's the lowest cost form of marketing I've ever had, other than buying lunch and corporate docs for people over the years. I really haven't had to spend a lot of money on that. And you get invited to weddings and birthdays. You know the pets, the dogs, the wife, the kids, the husbands, and it just changes the dynamic. They're on vacation, it rains, they do the obvious, which is to get in a car, get away from the hotel, and they go look at real estate. And they're going to call Brian up from God knows where they are in Florida or Costa Rica or Dominican Republic or Puerto Rico and shoot you an income statement. Hey, Brian, could you look at that for me? What do you think, man? Like, where the hell are you? I thought you were away with your family. Yeah, damn it, it's raining here for like 2 days. I got to get out of the hotel. I found a realtor and I went and go, I'm looking at a 16-unit building. I'm standing in front of it. Shut up and just help me. Like the conversations go like that. But now you can start to joke back with the person you develop and developing a different kind of relationship, one that will carry you for the next 5 or 10 years together. And I can't stress to you all enough on the line. I really do understand that it's frustrating in the beginning. I do. It's not easy. But if you stay at it and not just busy work, but be strategic about how you spend your time, you can be uber successful in a business where you can really keep your cash outlay to a minimum, which is hard to find in today's world. The tools that are out there, the forums that you can jump into for free are incredible. So I believe this is a great business, and I really believe talking with various people from both in our space as well as the banking sector. I really believe our business is going to double in the next 3 years in size. So I feel like that's a great opportunity for all of us. And if it takes 3 years to double and you're along for the ride, think about what that can mean for you if you start getting good at it. You build your client deck and just keep building it out. You could look down and have 50, 100 repeat clients before you go find new ones. You got a business at that point, and that's something to be proud of, feel good about, earn a living with, support your family with. I mean, that's a great thing.
Thanks. Thanks, Joel. You want to tell us about your pricing engine real quick? I think you left that off.
So,
People need to know
yeah,
about that.
we've kind of taken it to a new level. I know everyone on here is sick of dealing with people like me, and I can't blame you because we all suck. We promise everything great in the internet and deliver a minimal part of it. So we thought we would answer the question, which is to how do we change that dynamic? So we created a tool that you can use. The tool is free. It operates such that you can price your own loan. You can pull your own term sheet and never speak to our office. You can see what it is at 75%, 70%, 65, with yield spread, with rate buy down, whatever you want. You can put your logos all over it as well, as long as you give them to us. We'll load them in the system for you. The term sheets will all come up amped lending or John Martinez Group LLC, whatever it is. So if and only if you want to engage, then you'll start to tell us who you are. So you can do all of that without giving us any information on your client personally. I don't need you to log into the Rock portal and give up your name, social security number, phone number, email so I can retarget your client. We chose not to do that. We wrote this system from guys who actually did loans, and we know what we think sucks. So we eliminated it because we thought the clients would like that better. Did we take some risk that we wouldn't be able to retarget them as easy as Kiavi and Rock? Yes, we did. But we still thought in the end that would win out because that's what the client wants. And at some point, what the client wants actually matters. So if we had one lady in Ohio, she lives in Massachusetts and buys in Cleveland. She gave us all of our docs in 2 hours and 14 minutes into the portal. The portal through artificial intelligence, took the one file, dropped it into all the sub files that we needed. It scanned all the documents, and we gave her a loan approval that day. We are working our way towards getting that down to 15 minutes, 30 minutes. But for right now, we can do it same day if you send us a file. We can then close her in 10 days, which I think is market disruptive, even for Kiavi or Rock. I don't think they can do that on the DSCR side of the world, and we actually now can. We also did the unthinkable. Many of you have closed loans. When you close the loan, you were salivating to get paid. Can't blame you. Me too. So we got through the docs and funded in the next hour. You didn't have to wait for the 1 day batch. You didn't have to hope it happened today versus overnight. Your client didn't call you 75 times bitching and yelling. I signed everything. Why aren't they releasing the wire? Where's the wire? Where's the wire? So we've taken a look at some of the pain points and we're trying to address that. We're funding our own loan, closing in our own nondescript entity. We close in DSCR Loan Funder LLC. No one can call up DSCR Loan Funder and get a loan from it. So you don't have to worry about that. And if they call the office, if they figure it all the way out back through the channel, because there's always one comedian out of every 100 that actually reads the loan docs, they're going to get either one of two women on the phone and they're going to tell them to call their loan officer because they don't know how to make a loan happen. All they know how to do is close them. They don't know how to actually originate them, which is the truth. They wouldn't know what to do. There's no organized paperwork for them to walk you through. We're just not set up to do that. So that channel is completely wholesale. We give you the pricing at par. We're not charging points. Again, you can very quickly yield spread your client. They won't know. They can't see. It's in the term sheet clean. You've said, oh, Brandon bitches every time I try to charge 2 points. So I tell you what, B, it's 1 point this time, friends and family discount. But Brandon has moved the rate up 3/8 on him, right? And got his 1 point back that way. But the customer's happy. I have one lady, I love her. Her name is Mindy. We've been working together for years. She hates points. I said, Mindy, I can charge you this and the rate will be here. Joel, I just can't do that. I don't like the points, Joel. You got to waive the points. I said, okay, Mindy, no points, but here's the, okay, Joel, Like it like makes no sense to you mathematically or empirically, but that's what makes her comfortable. So why fight with it, right? And this kind of been a running joke for like 6 years now together. But she's a beautiful older woman, and we've just been helping her renovate her whole portfolio so she can give it to her grandkids one day. But those are the kind of relationships you build and you have fun with. The clients become more than just clients, they become friends, and you can joke around and know what's going on with their grandkids, or when she's singing in the choir at some of the different holidays, she'll send you a video of her singing. It takes on a different meaning. I mean, this business, depending on what you really want out of this business, it can have so much personal satisfaction for you, even though it's just math on paper. These are human beings trying to build legacy for themselves and their families. And if you really plug in with that, you can have a very special ride for yourself too, you know?
Thanks, Joel. Well, now we're right at about an hour, so I don't want to keep you too much longer to get to that Q&A. I did kind of want to recap today, but since we're up against an hour, I'm just going to go in kind of tell you a little bit more about the Private Money Pros group that we were talking about. First off, if maybe you've been to some of the other calls we had this month that are free, next Wednesday is our last free one. This is the kind of stuff we're tackling every week on these calls. Joel will certainly be on here again, but many other people, sometimes it may be led by us within our own company, but we have a lot of other guests coming in, lenders, other experts. We're pretty well connected in the industry. And then as we start getting feedback from the members in the group too, we'll create whatever needs to happen to make sure we're supporting you and giving you information. We're always listening both to the clients we already work with and any members in the group to figure out like what can we do to, give you guys something that's going to help you with your business, help move the needle. I'm going to put in the chat the link to our school group. That's school is the platform this is hosted on. So it's the mastermind community. If you guys want to take a look at it, what we've done is a couple things are cool. I will say this too, right in the beginning, we were thinking, hey, we wanted to make this group free. We ended up deciding not to do that. And there's actually two reasons. One is if we charge just a little bit, it helps us have the revenue to keep making this better and do cooler things. Who knows? I think one day we'll probably even do in-person events on this. That may not happen this year. We'll see. But on top of that, it also makes sure that we're getting people that are serious about this industry in the group. I'm sure many of you have been in like Facebook or LinkedIn groups where, there's some people in there you're like, well, I wish they weren't in here. They're kind of eating up the chat, kind of wasting a lot of time. Our hope is by putting a little bit of a wall there, we don't encounter that and our group quality goes up. And in fact, right now, through at least the end of the month or the first 100 members in here, we're keeping at just $99. I'm going to throw Chrissy under the bus here in a second and have her just show you real quick that platform. So you can kind of see what's there. Some of it you can just look at. There's a lot of resources that are already in there. I think the main value of it, though, is really the people that you're going to meet, the calls like this, the ability to communicate and network with other people in the group, the deal saver stuff. I'll let her get all into that real quick. We also made a very last minute decision about 2 hours ago. We're also going to give you access to a very cool tool. We've had phenomenal feedback about it. It's actually right by me here, LenderBase. This is a tool that we've built. It's basically a deal matching tool that helps match your deals to a variety of lenders by putting in the criteria. So with that, I do think I'll let Chrissy take over for a second and do some screen share and kind of talk about the Private Money Pros school group and the LenderBase tool that you'll get access to.
Sorry, my voice isn't working very well today, but I want to start by saying, Joel, you reminded me of this because as you were building your platform and we were building our platform, and I think the reason that we were both doing that was because you and I have had kind of a friendly relationship for over a year now, where we've helped each other in this business. Obviously, you helped me more than I helped you because you are the expert, but hopefully I helped you in some things as well. But yeah, so I think that's kind of what the inspiration was for creating the community, was having a place where not just you and I can have that sort of interaction, but a lot more people in this industry can have that camaraderie with other people to help each other grow and build things and do, great things together, even if we're not necessarily working together on everything. But maybe we might be considered, why can't I think of the word? um, sorry, I'm sick and my words aren't coming out, but you know what I mean. We are not, what is the word, Brandon?
Well, we're not full-time collaborators, but
Yes.
we're,
And
we're helping assist each other and
yes,
support each other with the tools. I can tell you from having gone on to the school site, as a starting point, it's far beyond the starting point. The tools that Chrissy and Brandon have already put up, the information in the different subjects and being able to access those is fantastic. I mean, when I started, I mean, it took me 5, 10 years to aggregate the kind of information that they're putting there right for you from day one. It's like anything else. Everyone here has a phone, and the phone costs $99 a month, let's just say. It's like, what are you going to do with the phone? Are you just going to sit there and scroll, or are you going to start to use this as a tool to go make you $1 million? Right? They're giving you tools that will enable you. It's up to you to implement, but they will enable you to have the background, the information, the structure, the organized thought process to go execute to make hundreds of thousands of dollars. And it's a fair exchange on their part to request a small dollar amount to help support that on a monthly basis. But more importantly for you and selfishly for you, it's a tool you need for your business at a very low, reasonable cost, where they grow it all the time. And through that, with your suggestions, they're growing as well. I mean, I was shocked at how much was already there, to be perfectly honest.
thanks, Joel.
Thanks.
Yeah, we put in a lot of work.
It
We've
shows.
worked with hundreds and hundreds of brokers over the 10 years. So we've seen a lot of mistakes, and also like just tools that we think could help people in this industry grow faster. So we tried to put everything in there. We're adding things all the time. I will share my screen here. I'll show you the
So,
community, and then I'll also show you LenderBase, which Brandon mentioned. We are going to give away free we've been told we should sell this tool as a standalone, but it will go to users or members of the community as well. So here we are. Please pay no attention to my hundreds of tabs that I have open. So the community here is where you can post if you have questions, if you just want to have a general discussion, if you need a deal to get saved because you're like, I don't know where to place this deal. Like I have this really tough deal. You want somebody to help with it. So you'll just kind of click here. You choose that as a category, deal saver. And then that will pop up. And we know back on the back end that we need to jump in there and help you. Also, anybody in the community can jump in and help as well. That's kind of what the whole point is. We have our classroom here. So we have just the starting point. We've put in here what I call our lender black book. That is just our lender list, essentially. However, now that we're offering LenderBase in here, you might not need that at all. We've got like just kind of the general foundations of scaling a private money business, just based on our experience in doing that with our own business, but also helping others. We
not
have
the,
oh,
if you're looking at this, scroll through it a little bit so they
okay.
can see the different modules. If you don't find 3 modules in there that you feel are worth $99, you're on the wrong call today. And I'm not selling anything. I don't get a nickel from it, but I'm making guys in my own office join because they need to spend time on this, whether they like it or not, if they want to be successful. And if they're not going to do it in an unorganized manner on their own, this is a great way where you have a professional person putting this together for you, thinking it out and speaking to hundreds of people. So I don't know. I think it's great. I'm sorry. I was just
You're my biggest cheerleader. Thank you. Thank you.
Yep.
I'm gonna interrupt.
And it will continue to grow.
Yep,
Yeah, great.
you can see some of these are still grayed out. We're still building them out, but they should be built out by next week, I would think. We've got some like ad templates in here, and you actually are getting access to our kind of proprietary framework for ad designs, because that's one of the things that we do is run ads for clients. So we've put in there just like all our little secrets on how we design ads for different personas. We've given you some ad templates. There's like, I think 100 templates in there. Let's see. This is going to have some follow-up systems that you can plug in. So we're getting ready to, that's, I think, the next one that will be in there. This one, everybody, I think, thinks that they know what they're doing with sales and lead handling, but from our experience, everybody can use a little help. So this is just kind of, it does seem like there's a lot in here, but, if you just take it course by course, just do like one a day maybe, and you can get some good extra tips on how to convert your leads and how to have a better sales call, and then also how to properly follow up with your leads, because that's super important, as Joel knows and loves to talk about.
I
How
do
to
too.
evaluate your deal properly, because that's always good. Our loan processing toolkit. So that has tons of templates in there that your processor would need, or if you're doing your own processor or processing, you can access all the templates that we have in here. There's also basically standard operating procedures. So if you hire somebody to do your processing, you can plug them in here and send them through this course, and then they'll be ready to process. If you're in here and you have a processor and you're like, hey, can you like help out? That's what we're here for too, is just to help you in any way we can. So anytime you need help with anything, just ask. That's what we're here for. As you're scaling your business, you're going to need to build a strong team. So we've got some different information in here about how to, I guess that one's not done yet. Excuse me. But yeah, so that one should be done. So that one will be up there. But everything you need in here to scale your business, that's the purpose of this, is how to scale your private money brokerage. So we're going to have the live calls in here. You can go back and watch all our live calls. And we're going to have, we're going to be having 2 a week starting in May, possibly 3 a week. You can go to the calendar and see what we've got started here. We're going to have some special guests. Yeah, so that's the community LenderBase here. So I'm already logged in. But basically you come in, you're on the home screen. So the cool thing about this, because there's other tools out there like this, right? We've seen them. We built this because we tried all the other tools and we hated them. So we did not want a database of 7,500 banks and credit unions, and then a few private money people sprinkled in there. We also didn't want something where I could just search by like what state they lend in, what kind of loan they do, and will they do this loan amount and this loan type. We needed something where we could actually like find a lender. Obviously, our go-to is always burr.com. But when it's something that we know, Joel's going to look at us and tell us no. Then we come to our LenderBase, and we can do a couple ways. So we can filter the lenders here, and we have so many data points that you can choose from. So my favorite ones in here are the property characteristics, like rural, mid rehab, and we need an arm's length transaction, right? So we've got some weird things that we know that I don't want to have to call 40 people to see if they'll do my arm's length mid rehab rural transaction. So I can limit it, or I can narrow it down here. You can narrow it down further with like loan type, loan amount, terms. Sorry. Then different, DSCR information. If you know the LTV you need to get at, if you've got maybe some weird numbers and you want to put that in there to make sure that you're finding that. Here's do they allow deferred payments? There's not going to be, nobody's going to do all of those.
Not in that scenario.
No, they can put in the FICO experience
You
level.
should drop in a picture of Santa Claus.
Right. That's what I'll have to set that up on the back end. If there's nobody there, it's a miracle. Maybe a unicorn.
Yeah.
Yeah. So you can also favorite your lenders. So if you're like, oh, I know these are my favorite lenders, Burr.com, you can click on the lender and see a lot more information about them, and you can get the account rep that we recommend. Obviously, you can go get your own account rep there. There's usually some little notes information here. You can dig into their guidelines more. So you'll have your favorites. The other thing that's cool is you can leave reviews about the lenders. So if you have a good experience, Joel's like, no.
Uh-oh.
Kevin asked if there's hard money lenders in there, and I think the answer is yes, right?
Yeah, I would say there's probably more of the institutional private money lenders in here, and we're working on getting more of the hard money lenders. We don't want to put any in here though that we haven't, vetted and made sure that they're actually like legitimate and good. So it's a little bit harder to get those guys added because it's like a family office or just like a guy or a female. So but we'll be adding some more in there for sure. But the reviews thing is going to be good because you can tell if, we like somebody or not. And then you can do it. So if let's say you have a loan and you're like, I don't want to have to type this information in a bunch of times. Like I might need to come back. So you can actually like enter in the loan criteria, just put that, create a whole loan scenario. I'm not going to go through all that right now, but enter it all in there, hit create loan. It's going to make this loan right here. Then you hit view and it's going to tell you the lenders that match, and it's going to give you kind of like the percentage of what's matching. I don't think I entered a closing time, so that might be the issue here of why that's showing up like that on all of these. But it tells you, who you can call and which ones you should call first. So that's this tool. Like I said, we built it because it was what we wanted for ourselves and we couldn't find it anywhere. So I don't know if there's any other questions about it. Hard money requests for big commercial deals. Oh, Joel, you got that.
Yeah. So yeah, why don't we do the Q&A stuff here? And I appreciate you listening to us spiel on about what we do. Let's see, what do we got for questions? Oh, Kevin, or Joel, sorry, never mind. That was to Kevin. Does anybody have questions? Do you guys know how to raise your hand, or you can just pop it in the chat? The hand raise thing on Zoom, they moved it. It's a little harder to get to, but if you know how to do that, that's fine too. Um, let's see here.
Evan.
There's one from Adrian in there, I saw.
Adrian, all right. Yeah, yeah. Oh, that's about what we're classes training researchers for those starting out as new LOs and training new loan assistants. So I think that's a question about the private money pros and not so much for Joel, but that's okay. I believe. Adrian, you can unmute if yeah, you're here, I think. Dress fancy, I think.
Thank you. Yeah, I'm
Fancy for
here.
me.
I'm just getting into the investment, multiple lending sources, just trying to figure out what the banks don't want to generally do for investment properties and like people who have a lot of properties and how to get deals done quicker. So I've got a lot to learn in that space. I'm just a plug and crank guy. I did this a few months, 15 years ago, and I'm getting back into it as a second business. And my girlfriend is like, "Hey, I got all these people, they want to buy investment properties." And I'm like, I've never focused on that. So I've got a lot to learn. And then because it's my second business, I'm going to want to quickly acquire what I need to have the conversations and not sound like an idiot and have a team under me that can just, I have the conversation, I make the deal, and they, I can train them on why we're doing this so they can field some general things and handle the back end for me. So I just want to make sure if there's anything that can help me grow the business and learn learn the business quickly on those trainings, either on Amped or on School, or even, if there's resources with BRRT I can partner with or something. So just anything I can use. This was really useful information today. Thank you, Joel. But I do want to figure out, and I saw your webpage, and I love how y'all break it down. I've just got to get used to doing it and having those initial conversations and just kind of know which way I need to go with it and get used to it.
I think when you jump into the school community that Chris, you just showed, there's going to be a couple of modules in there that are more specific to exactly what you're asking about. If you saw quickly when she highlighted one of the modules, it would show to the left what some of the information is that's outlined in the module. And one in particular, I forgot which one it is this second, but it did speak to exactly some of the questions you're raising right now. And I think that would be helpful as a training tool inside your own office and your own sphere of influence to have people walking through that and spend an hour once every 3 days on the same module till they actually really understand it and start to implement successfully that way to get away from sounding brand new, to get away from sounding uneducated. And just the way you're speaking right now, Adrian, you're obviously very intelligent. You're putting together well thought out questions, right? And you're asking them in a manner that presents somebody who's a serious, experienced business professional. And that's what people want. Now you just got to tweak it a little bit to be able to sprinkle in the acronyms, to go over some of the nuance, and you'll be able to pick that up very quickly.
Well, thank you. I appreciate that. And so all of those trainings are available through the AMPed, or sorry, the Private Money Pros membership.
Yes.
Yeah,
Okay.
and one thing you talked about hiring a team. We do talk about we have in the module about scaling your team, like kind of who to hire first and what they can do. Joel, I know, has great experience hiring people in Latin America, which is one of the things that we also recommend.
Chrissy and Brandon taught us that. I'll be
Okay,
totally,
I did teach us.
totally honest. At first, I was really skeptical. That's the truth. I was nervous because I hadn't done it before, just like most of us in life, right? And then we investigated it. It seemed too good to be true. And then we tried it, and 2 out of 3 have been super successful for us. We're definitely an advocate. Definitely an advocate. Look, you might have to tweak it a little for yourselves as well, but you're going to find what you want.
hmm
Thank you.
No, thank you.
I appreciate it. And then the other question is, do y'all partner ever with like clients that have multiple things going on? Y'all don't handle any of their questions about should distrust own it or whatever. They have their own. You just let them use their own resources for attorneys. We don't need to partner with like a real estate attorney or anything for any.
I think you got to be careful along those lines because even if you were partnered with one of the great asset protection attorneys in America, if something went slightly askew, you're going to get blamed as well. And you don't really want to be in that position. None of us really know everything that's going on in somebody else's life. And until you do, it's hard to give them really solid advice. So, other than giving them 3 resources that they can go choose from, I personally try to stay away from that. And I make sure my guys and women do here as well. We like to give you 3, Adrian, and you figure out what you like. And if they don't feel good, try somebody else.
That
But
sounds perfect.
that way, nobody can say, well, you steered me somewhere.
Yeah. Okay. And the other question, I'm starting to forget it already. I'm sorry, I got big allergy issues. Had 8 flights in 7 days. My ears aren't popping right. So if we want to learn about how do we compare the benefits of this program versus this program, it's mainly going to be the rates and how much they got to put down and how long they need to carry the note before it's going to exit strategy. But like the training, is that more the community we use, or is that some of the training modules I just need to work through?
So
Like
I would
loan
say
scenario question.
we don't have training right now specifically about how to do the loans, just because our community is really more about scaling your business as a private money pro. I would
Okay.
say if you need like help with that, that's where like if you do a loan with Joel at Burr, he's going to guide you on some of those things. We have some like high level overview of the loans, but we're not really designed to like teach you how to do them. We can help you if you have questions about them. You post it, we'll help answer those questions. But we're not gonna put like it's a big process to teach you how to do all the loans. And so we kind of had to choose like, what are we specializing in? And it's really helping you grow your business after you've kind of been in it. That being said, if you have questions like that, you post it in the group. We can help you. We can direct you, but we're not like necessarily going to hold your hand and teach you every aspect of all the loans, if that makes sense.
Okay, I think I get the program now. It definitely it's the problem I want to have.
I
So
think too,
we-
once you get into it, like there's definitely a learning curve to get through. And I think that I learned that going through commercial stuff, and I realized that I don't, like tons of, warehouses and that kind of thing. I don't love that. So it's also trying to find out, what is most similar to what you do is probably 1 to 4 unit fix and flips. That's going to be the easiest way for you to get in. And it's all going to be numbers that you recognize. So even dropping something in a channel and saying, hey, what does this look like? We can say, well, your borrower doesn't know what they're doing. They have no credit. They have no money. Probably not a good go. Or this is a great person. It's going to be easy for you to do. And here's a list of 5 questions that you need to ask. So again, you don't sound dumb. And that's a very simple thing. I think it's just, kind of like anything, throw yourself to the wolves a little bit and don't be afraid. And if you get,
Mhm.
one,
So
two
my
people.
so my girlfriend is a realtor and she's kind of just throwing me into the deep end, right? And I feel like I've been playing in the kiddie pool, what I've known to do in the past. And so we're looking at buying gas stations or convenience stores or whatever, all this other commercial stuff. And then we have people that want to do investment fix and flips, and some of them want to do like she wants us to buy a multi-unit property. I'm like, I haven't ever even looked at how to do that. So I've just got to find a good pool of resources for high level, which direction do I need to run in? And then find a lender partner that will help me with the details of the loan and how to pick the specific product. But I mean, I feel like I'm just brand new to this space, and this sounds like a very professional group to learn from. So I appreciate the info.
Yeah, Joel loves commercials, so he's your man.
I've actually done hundreds of gas stations. So I can't believe you picked that out of nowhere. It's like we said,
Well, she's got somebody that wanted to buy like 3 or 4, and I'm like, oh,
yeah, no, we've done hundreds of gas station loans around America, Wisconsin, Texas, Virginia, Florida, New Jersey, New York, Pennsylvania, Connecticut. I feel like I'm missing one state, but those are the majority of the states we've done them in. And the gas business, it won't sound right because I'm a guy, haha, it sounds funny, but gas has been great for me, haha. But it helped get 7 of my kids through college. So without the gas industry, I might not be standing here today. So it's a near and dear to my heart. Mostly the specialty use properties, I've spent a lot of time in that space. About 75% of my clients are foreign-born American. And traditionally, because of language barrier, that's where they all originally went to. Now, obviously, that's changed a lot now that all their kids have gone to Harvard and Yale and whatnot. But traditionally in the 50 to 70-year-old part of that community, that's what they did: hotel, motel, restaurant, where they can change money and not have to speak English much. And that's what a lot of people don't realize. That's why a lot of that community and those communities went into those lines of work. See, Americans are horrible at breaking things down to its most basic elements so they can figure things out. They want to do jump in the deep end and see if they can swim, right? Instead of learning from the beginning and having the picture come really open and wide for them and then crushing it down the middle and hitting a home run. People don't realize how much knowledge they can gain by just slowing down and thinking that through and then applying it and never sounding silly, never sounding uninformed, never sounding like a newbie. I mean, you're plugging into their language, their culture, and understanding what they're doing and experiencing. And that's been an amazingly rewarding part of my career. I would have never even imagined I would get treated the way I do. And it's almost always by people who don't look like me. traditionally. I just don't deal with a lot of people who look like me. I haven't found that to be fruitful, to be honest.
I mean, nobody wants a haircut like that, Joel.
Yeah. Listen, every day is a good hair day, right?
True.
It is a good hair day.
True.
Life is
Every
much.
day is it. Yeah, my
But
makeup never fades either.
all kidding
Uh,
aside, like, if you develop a niche like that, Adrian, people will literally come to you from all over America because those families are so large. My brother-in-law said I should call you. My sister-in-law has a restaurant. You got to call her. She's in Utah. Like, what? You'll find that people will be incredibly loyal to you.
Well, that sounds great. What I've got to figure out is where to start with my business plan and have a team that I can sound ideas off of.
Yeah.
But yeah, this is just a new space. We're going to be looking at probably a lot of things that I've never considered for buying a multi-unit like HUD front property. So there's, government assistance basically on the back end. So, and then there's just going to be regular 1 to 4 unit properties is kind of where we're going to start, but we want to build to a multi-unit. So I want to be prepared for when it's time for us to do it. But I know how excited, we are about it, and I want to just find a way to tap into people who've already done it that I can help them get the funding for it and where to go for that. So the lender, I forget what it's called, LenderBase something is
yeah, the
part
Thunder Bay.
of the Private Money Pros membership as well as the training. And then Joel, you guys are like can be a lender partner with me, or I wasn't sure totally how that works with Burr.com.
We can either be the lender blindly in the background, or we can partner with you on a deal and help you, certainly.
Okay, so if I partnered with you on a deal, we could go figure out a deal together.
Absolutely.
Okay. Well, amped. I like the name
Thanks.
more than the drink. But I like it. I like what you guys are presenting. Thank you.
Thanks so much. I think we had a question from Kevin. His hand's been up for a minute, and then I see Joe Russo. So Kevin, what was your question here?
Guys, yeah, just quickly, Chrissy did a nice job explaining. Thank you. I wanted to understand, you had put a deal in the loan base, and then you showed the list of lenders that came up. But what do you do with them? Do you email them a summary, or do you just call them right from there? I guess you left.
No, I think she's
Yeah.
on mute, doesn't realize it.
Oh.
I
I'm
mean, I
off
can probably,
mute.
oh, there we go.
Oh,
She'll
Sorry.
answer.
okay.
Alex is on our team. I bet she has a good answer for that one.
Well, so I do a mix of both. So I depending if I know the lender or not, if it's somebody that I've used before and I know that I'm signed up with them and I've put a relationship, I just send the deal over. And we have a very particular way of sending things. I know that Joel had mentioned this. You want to send us all of the details because that's going to make your lenders really like you. If I
And we
don't
have
know,
those templates in the group.
exactly, there's templates in the group and they're great. You just, all the basics of the deal, you get it over, you get a quote. Otherwise, you have, 3 days of back and forth getting details. If I don't know the lender, I've never signed up with them, 100% I call the rep every time. I want to talk to them. I want them to know me. I want, to show them what I have, what deals I'm bringing, and just get a little more clarity on the deal itself. That's a great resource. I mean, it really narrows it down because I have spent a lot of time calling lenders that cannot do the deal at all, not by a long shot. So I would do a mix of both.
And do the lenders in your system know that they are in your system?
Mhm.
Yeah.
Yep, we've spoken to them all personally, and they fill it out.
Oh,
And even
okay,
so,
good.
I wasn't, yeah,
Good.
even if they don't care. They always want more business.
Okay.
All right, very good. Excellent. Excellent. Thank you.
And then Joe, I had a question, Joe Russo.
Hey guys, how you doing? Thank you very much.
Good.
You know something? I had no idea what I was coming on to today when I got on the call. And I'm a seasoned mortgage banker, been in the industry for 25 years. So I do conventional FHA out of New York. And I just opened up a private money brokering shop myself. And everything you said, Joel, Brandon, and Chris, it's by far amazing information. And I just wanted to go out there and tell you, just Joel, even the way you touched on the market and the way it's going, I could speak as a authority in the FHA and conventional side with the private and what I'm learning and how I'm jumping into it. And I'm annoyed at myself I didn't do this 5 years ago because what I've made, I'm closing 2 deals on a DSCR in the next 2 days that I'm grossing a significant amount of money on. That's going directly to my LLC, where ultimately I would have to pay W-2 wages on that and commission splits to the bank. So now I'm putting additional like 40% more into my bottom line that I would normally lose. And it's all because of just sitting back, shutting up, and listening to people like you guys, which I appreciate. Some of my experience or some of my problems I'm reading up, I'm coming across right now, and this is my question, has been a lot of smaller loans out of state and dealing with uh, rural properties, because I'm involved in 2 or 3 major networks right now that I've really come in as the authority and they trust me and I'm feeding a pipeline of loans that are coming through right now. And I have a couple of lenders that I'm doing business with who love me. But, that's my biggest thing right now is really the rural properties, my smaller loans, and obviously your the difference between lenders that do an AVM versus a full appraisal.
So first, Brandon, this is being recorded, right?
Who, what? I'm just kidding. Yes, of course. We're gonna have this back up on YouTube.
I
Yeah.
definitely want that first half of that clip to send out to the 2 million residential people around the country. That was beautiful, Joe. Thank you. But to your point, we don't like to brag about it, but we do loans down to $50,000 on the DSCR side. We're trying so that the loans are sellable. We're trying to get the properties to appraise as close to $75,000 as possible.
Mhm.
We have a little wiggle room, of course, but we're trying not to appraise properties for 58,000 and do loans on them. They're very difficult to sell those loans. That's what you're running into on the backside. You're also going to run into a big bump in the interest rate on loans under $100,000.
Mhm.
So if you're talking to people like me, men and women, you need to make sure you ask if there's a bump in the rate. Make sure if they're showing you a pricing tool, make sure that's incorporating it correctly so that you don't get surprised or your client doesn't get surprised, I should say, with a half, 3/4 bump. And you're like, what the hell just happened? Well, we finally got it through underwriting and someone noticed the loan was 61,000. Well, in our sizer, it was a little screwed up, and under 100, you got a 3/4 of a point hit. We're going to give you back an eighth because we know we effed you. So, we don't want you to feel bad and come back to us with a good loan. And on the rules side, don't tell anyone, but we can go to 75%.
Okay. What do you deem rural? Like, do you use if it goes off the USDP site, or do you see the amount of population?
We're looking at both, to be honest. Once in a while, you'll run into an appraisal that'll get marked suburban. That is still almost impossible for us to fight through as suburban, and it really is rural. We're looking at both sites.
Mhm.
I mean, it's
Are
just,
you pulling a CDA basically based off the appraisal? You're using an appraisal through a
yeah,
management company, or is it
yeah.
going to be their own appraisal?
No, we want to use AMCs. I do not want to get in a fight with people or on the people side, I mean Goldman Sachs, KKR, people we sell to. I don't want to have a fight with some asset manager who's never actually even seen a piece of real estate. It's just an Excel spreadsheet. So we do cover our ass. That's the truth. We use
Mhm.
appraisal management companies and we do CDAs, collateralized desktop appraisals. That is what's happening when your loan is being held up that last 24 hours and you're really pissed off at the loan officer you're working with and you can't figure out why you can't get to close and you've gotten every document in. They keep telling you got everything in. You can't worrying about why it's not moving forward is because they're waiting for the collateralized desktop appraisal to come back clear to verify that the value is within 10% of the appraised value. That's what's going on in the background or they're trying to pre-sell the loan
Mhm.
so that they know they're going to get funded. Those are the two things that are holding up the loan. That's, completely behind the
I'm
curtain.
seeing that a lot. Understanding
Really
from
what's
from a banking perspective, a lot of
Yep.
people have their own correspondent warehouse line, and they only have X amount, and they want to clear it off and get it sold off. So I do see that, and I guess I
100%.
probably understand. The other one last question, guys. I'm sorry, but I'm like I'm seeing a lot of pullback on the 5 to 9 unit properties right now. Is there something going on in the market that they're from a DSCR perspective, they're not liking that product right now, or
It's never been a true mainstream product where it's been sporadic, where the pricing is actually pretty different between lenders. It's not always the same vanilla off by an eighth. I mean, some
Mhm,
people have floor rates that are much higher than others for their avenues to sell the loans off. We actually can go up to 10 units. We can go above that as well. The rates bounce up probably another 25 to 50 basis points at 11 to 30 units. But we can do 5 to 10 pretty well. Look, the rates are not the same as 1 to 4 family. I don't want to mislead anybody. One
mhm,
to four is definitely cheaper, but it doesn't have to get outrageous on 5 to 10. It can be rational. Now, if your borrower has a 680 credit score, yes, it's going to be ugly. That is
mhm,
true. 5 to 10, 720 plus credit scores, the rates are rational. Once you go below 720, the rates bump up a lot.
mhm. Okay. Okay. I have one on my desk. I'd love to run by you, Joe, when we get a
Sure.
chance.
I mean, we're transacting, we do a little over 1,000 loans a year.
Mhm.
Uh, hopefully to double that in the next year with the platform and, groups like this helping us in that sense. It's a two-way street. We can help you get some deals closed that you might not be able to. And in return, once in a while, you throw us one of those ones that is actually like right down the fairway in exchange for handling some of the oddballs. You
Listen, the one
know,
the one thing you said is a relationship capital, and that's probably one of the things, the biggest mistakes I've made in my years of be not understanding the value of a relationship. And that's what I've really keyed in on the last year of my life, and it's been amazing how the truth of what it go where everything goes. So anyone on this call, what everything they said today is 1,000% true because I've witnessed it myself. Um, so you're in good hands right here because it's just amazing what you put together. It's pretty nice. It's pretty smooth. So thank you.
Thanks, Joe.
so, yeah,
We
for
don't
my
know. This is our first time
I've
meeting him.
never met him before, and
We're not
Yeah.
paying Joe.
thank
No,
you.
yeah, I'm straight shooter. I call it the way it is. That's the New Yorker in me. So
Brandon,
um,
send him the DJ video, Brandon. Here you
All
go.
right, that's coming next. That's what we're doing on the third call from now. Just kidding. Well, I know we've kept Joel over a lot, and I appreciate you for coming out and sharing all this wisdom and all that. Look like all the questions have wrapped up, I think. If so, if not, if you have any last things drop in here, I'll give Joel one last chance to say whatever he wants, and then we'll send out some emails. I think not today, probably tomorrow, just so you have replays and basically in Joel's contact info and everything you need. So appreciate you all from coming on. But Joel, any last words of wisdom for us before you go, or anything you want to say?
I believe staying at it day after day after day is the best way to win. To Joe's point, relationship capital, treating other people with respect and viewing them as an important part of the process, whether it's a small loan, big loan, in between, is the way you'll win long term. So, for me, I've been very fortunate to be standing here celebrating my 30th year doing this. And, it's been an amazing ride. We got to meet some great people along the way. And I'm looking forward to meeting a lot of great more people, the rest of this year and into the future. So thank you again for having me.
Thank you.
Okay,
Brandon,
thanks.
real quick, Sherrod had a question. He missed
Sorry,
part.
Sherrod. Sorry about that. Thanks for the eyeballs. Sherrod, is it still here? Yeah.
Yeah, he just basically missed part of the call and how to get access to the lender database, price, and access to this recording.
Cool. So I'm gonna repaste it. This will go up on my YouTube channel. I'm putting that link in here. The other questions is if you want to be part of the school group, that's the Private Money Pros. That's what I don't have that background on. That's one I should have. That's why we're holding these calls. Normally it's only for members, but this whole month we're inviting people here for free, so you can kind of check it out. Do you want to put that link in the chat for us, Chrissy? And I feel like I missed one of the
The
things.
price. So Private Money
Yeah.
Pros is $99 a month, and LenderBase is available in that group. So LenderBase currently is only available to our clients, agency clients, CRM clients, and now we've decided to make it available to community members as well. So yeah.
Temporarily. So
Yeah.
so jump in before we change our mind. It does actually cost us money every time it's used. So we got to put a limit on it at some point. But you're the lucky ones. You're here the day that we made the decision to throw it in for you. But it's super cool. And then Chrissy, since we made that decision literally just a couple hours before launching this, we'll have to add something in there because technically it lives off of the platform and we have to invite you to it. It'll be pretty obvious. So if you do join the school group right this second, you won't have access this second, but I think we can get that up probably by the end of today, right?
Yeah, just you'll get an email
Yeah.
invite. The invite lasts 24 hours, so just make sure that you try to sign up within 24 hours. If not, just shoot us a message and we'll send you another invite. But yeah.
So,
Awesome.
yep. Awesome. Well, we'll be back next week. The link that you have for this one, same link. Next week's our last free call. So whether you're decide to be part of the school group or not, Private Money Pros, no worries. We'll, like I said, be back next week, and we'll be talking more on AI. And as I kind of mentioned, I think we're going to have a lot of calls besides our module in the program about AI. I think there's a lot of cool things that AI can help you do. I know some of you might have never touched it, might be scared of it. It's really cool. Trust me. Some of you are probably pros with it already, and some of you in between there, but many other topics to come. So cool. Thanks
And
everyone
Kevin
for
just
jumping on
joined. Yay.
here. Yeah. Yay.
All right.
Thanks,
Thanks,
Kevin.
All
guys.
right, thank you guys.
We'll see you in there, Kevin.
Yep. We'll see you soon.
Bye.
All right,
Take care, everyone.
thank you.